Hello, everyone. Happy Monday morning. Hey, it's the longest day of the year this week. You got options expiration. We got Fed speak. We got retail sales. What else could we want or ask for? Good morning, Ro. Good morning, Jacob. I did not know that. Did not see it, Sterling. Thank you for putting that in there. It's not the number two currency holding is gold. Are we going back eventually to something backed by gold? Good morning, Patrick. Good morning, Sterling. Hey, Sterling, where are you on vacation, if you don't mind sharing? Hope it's a nice spot. And thank you for tuning in, even on your vacation. Really appreciate that and spending the time to put in the news. Good morning, Mark. Day in front of screens, all is well for me. Hope all is well for everyone here. Good morning, Legion Reaver. Good morning to people in the background. Good morning, Charles. All right, we'll wait for some more people to filter in. Remember, buyback window is closed ahead of next quarter's earnings. So stock buyback window is closed. We got option expiration this Friday. What else? We got cycles at a top. We are also DeMark setups could trigger. Topping setups could. Again, this market could just keep chugging along. We got Elliott Wave and DeMark at potential topping areas. So we got a lot of stuff going on. That's all I'm saying. So nowhere, in case stuff does trigger to the downside, know where stops are. Other than that, could just keep chugging higher. Good morning, Royal Palms. We had the Empire State Manufacturing Index coming in a little better than forecast, a little better than previous, but still negative. We got some 3 and 6 month bill options today. We got Harker speaking. We got Cook speaking tonight. So after market close. Tomorrow we got retail sales. We got industrial production. We got a ton of Fed speak tomorrow. And absolutely, it's Tuesday Fed speak day. So Wednesday, we have the housing market stuff. Juneteenth. Oh boy. So we have EIA numbers delayed till Thursday. Okay. We have housing starts on Thursday. We got jobless claims. We got the mortgage. So stuff that would normally come out for the most part on Wednesday is coming out on Thursday. And we have Friday, remember, option expiration. We have the S&P Global Composite Manufacturing and Services, Consumer Board's leading index, and some red counts. But the bigger thing this week, again, will be the two big things are really retail sales and then going into option expiration. And if the Fed says anything important, although here's all you need to know, Broadcom, all you have to say is AI, and announce a split, and you're going to the moon. Going to the moon. It's a new stock strategy. Remember years ago, it was just you put crypto in your name and you went to the moon. Now you just have to say AI. That would be AI 3 times and announce a stock split, and you can go to infinity and beyond. We got Micron running up. We got Avgo. We got Nvidia. We got Apple still after breaking out from the triple top area. But let's see how this fares now with buyback window being closed. Groups, you got technology. Technology is going to have to save the day. The whole market's based off technology and pretty much the Magnificent Three at this point. Fed watch still favoring a cut in September and then another cut possibly before the end of the year. So 2 cuts. Fear and greed still in fear mode, mainly because the breadth is just getting trashed and the stock price strength. If you look at it last week, I mean, there, even with new highs in the indices, lots of stocks making new lows. We're in extreme greed with bad breadth. Not bad breath, bad breadth. That's not a good combination. And PE still incredibly elevated, at least a Schiller PE, which is the one I watch. In terms of earnings, we got some Lennar. May your roof cave in, Lennar. After the close, we got KB Homes tomorrow. And what else we have this week? We have CarMax on Friday. Winnebago on Thursday. Let's see. I'm wondering to see how RV sales are doing with going into potentially a pretty deep slowdown. Looked at just a couple houses this weekend. Just a couple, just to keep my pulse on the Phoenix real estate market. Still seeing insanity, and people for the most part. There are a couple I bet will go under contract today because they were reasonably priced compared to most of the insanity out there. So, I mean, based off today's market, they were very reasonably priced. So they'll probably go under contract. Other than that, a lot of sellers are like, they're pulling them off. If they can't get their price, they're not even lowering. They're just starting to pull them off, and they're going to wait, which we'll see how that works out for them. But back to the markets. Let's see. Let's see who else is here. Oxy has a really interesting daily chart. What did you text me, Sterling? That's very nice. Let's see here. Let's see here. Let's see. Woo. Hold on. What just happened there? Oh, it won't let me open it. Here, let me do this. Here looks like here's Sterling. I guess that's your current view from vacation. There's Sterling's putting up the news and information for us. Sterling's view on vacation. Thank you, Sterling. There we go. If I remember, we'll do Oxy. Good morning, Martinez. Hey, thanks. Let's do some thumbs up. Good morning, Anissa. Fly me to the moon. Good old Frank Sinatra. I'm in Surf City, North Carolina. Yeah, I put up, again, everybody saw Surf City, North Carolina. That's the kind of view you can get. Don't think I've ever been to Surf City, North Carolina. Don't even think I've been through Surf City, North Carolina. Thank you for sending that out, though. All right, here's the big thing. Daily cycles pinned to the top. Overbought. Weekly at the top with weekly divergences. Now, a pullback to the weekly rotation zone could be in order. We could even eke out new highs first this week. That's why I have a lot of different clusters up here. The key thing for me in the short term is seeing if we close below 53.22 at all this week, if we do pull back, or next week after OpEx is out of the way. Because then we could pull back with what gets more critical, and we might never hit these levels. What gets more critical is about 51.70. 51.70 over the next few weeks will be interesting. You can see here, this is just, and if we want to properly draw a wedge on the weekly basis, let's see what it looks like. Let's see if it even qualifies, because yes, it does. Yep, there's the move that builds the wedge, and there's the clear wedging formation up. Now what's interesting is the top of the wedge, and we have a little cluster up here. So let's go back and take a look about where this would be. Let me fine tune the wedge on the daily time frame. There we go. So if this does pop higher, a very key cluster area would be this 55.50, 55.60 area that I'd be watching. The minor levels, if we break out today, the minor level I'll be paying attention to is roughly about 55.30, 55.31. Then intermediate level 55.41, and then your major cluster 55.50 to 55.60. The pullback area. The pullback area, which is very key support, is by around 54.78 to 54.73 on any pullback. We start getting a close, at least with a follow through on a 4-hour close, below that 54.78. We have the contract roll gap, potentially back to 54.39. And also watch this. If with the rising rotation zone, that 54.78 area, 54.73 to 54.78 is going to be very key for support. The daily rotation zone is back at 54.40, which is where I'd watch for an intermediate potential little reaction. That 8 EMA is very, very powerful. You see how well it's held up, especially on a closing basis recently. NASDAQ, again, same thing. Daily cycles at the top, very overbought. Weekly cycles at the top, just gone vertical last week with the buybacks. Next key little area is 20,150. 20,150 to about 20,244. That's a wide cluster, though. I'd be watching that's 20,150, and we have a little short-term wedging area up there if it does eke out new highs. The key support on the NASDAQ, and at least in the short term, you can see it pretty well right here, is right about 19,790 to 19,817. So that's where I'll be watching. If that starts breaking, you have the contract roll gap. All right, so that's the same thing I'm watching in the NASDAQ. Just be careful. Not saying we can't eke out more highs going in, especially to retail sales tomorrow, but this thing is getting very top heavy. Does not mean it has to crash. Does not mean we have to have a massive pullback. We could simply pull back to even the rotation zone on the daily. But we have the potential of a much bigger move starting. And that's only a potential. Dow has gone virtually nowhere. Virtually nowhere in the past week. Key support for me is the 38,730 watt 30 area. Key resistance is about 39,080 to 39,100. Other than that, I'm just watching to see what the Dow does. There's not a lot of great setups in the Dow. The Russell closing just above the very key support I talked about this Friday with those two bottoms. Closing just above the two bottoms, but now testing the 62.5. If we close below 1997.1, I'm really focused on the Russell reconnecting with the 200 simple and the 87.5, giving us a major target area around this 1945 area. Keep that in mind, especially with now we have the breakdown area here. Let me put a line there. The breakdown area. So this was support and now potential resistance. So on any rally in the Russell, 2027 is very key resistance. I would disagree, dark screen. VIX, slightly elevated. Slightly elevated. So I'm just sitting up to take notice, but no real panic in the market just yet. Wondering if we are forming a slightly higher low and going to get some more volatility coming in soon. The DAX, after it completed that mini double last week, it's now the key area on the DAX. Just fix this too. That's slightly off. The key area on the DAX. We closed below that 62.5 on Friday. We also closed, if you look at the close, we closed below the lowest close of all this support pattern. See, this close is lower than all this prior consolidation before the run up. We closed below that too. So I'm watching first for a return to about the 17,785, even if we bounce. Going to be watching for a rollover in the DAX and then possibly triggering the still bigger double top with the weekly rotation zone out of the way. You can see last week we closed right at the bottom of the weekly rotation zone. So I'm watching for continued rollover plays even on bounces in the DAX. The notes, close enough to at least raise a stop from my perspective on this interesting double. Coming back into key support about 110.08 to 110.06. With daily cycles back to the top and a divergence setting up. So that's why from any long notes position, I'd be looking to more aggressively raise a stop. The yields, we also have a divergence down here. So higher low in the RSI, lower low. And now the yields starting to climb a bit after getting absolutely massacred over the last couple weeks. But your now major resistance area is back at about 4.32. So going to keep an eye on that. But we got cycles at the bottom and on the weekly. We're doing a little double dip in the weekly cycle bottoms and holding against the 50. But now we have a lot of overhead resistance on the yields. Dollar index closing just below the 62.5. Closing just below the 62.5. So no follow through just yet. Gonna be watching today where it closes. For the dollar, short-term dollar run, we need to get that close above the 105.11 area. On a pullback though, we got the rising rotation zone, the breakout area, so 104.70 to about 104.80 is very key support. Crude is a very interesting situation. Crude confirmed this double top, but not triggered. Now, crude runs back up to this 79 area. We'll take the double top off the table that's not triggered. If it reverses back down, it still needs to close below 77.67 to trigger that. What's interesting is daily cycles are at the top and have been at the top, but so far this is a sideways correction. So far it's a sideways correction. Weekly still turning up. So this is building, the double's not triggered, and it's building a pretty nice little potential breakout base. With things slowing down, crude's actually, we had the big sell-off with stuff slowing down, and crude's now snapped back into that consolidation and still trying to build a base without triggering that mini pullback pattern. If that mini pullback pattern does trigger, look where the potential target of and the 50% retracement of this run-up. So that would be a very tight pullback. Maybe it gets cycles back to the bottom with weekly still going higher. But before I can get overly bullish, we have a lot of resistance overhead around the 79.60 area. We also have contract rolls. All right. Coco, I'll see if I can unlock your other account. Okay. Why do they keep deleting your accounts? That's what I'm wondering. Or if I don't know if Sterling could undo it. He can still unblock people. Because we don't want to miss you, Coco. We love to hear what you have to say. Gold is interesting. Now, we still have the potential bigger pattern in play. We have a little minor pattern bullish play, and we're at weekly cycle bottoms. Dailies are still trying to turn up. we do have a potential little mini double with only the first and second targets being valid. It would then have to follow through for me with a close back above this 2340 area. But I'm watching specifically to see if it can close tomorrow, especially without invalidating this pattern. With retail sales, if we get a close above 2358.8, gonna pay it very close attention with weekly cycles being at the bottom, not triggered the potential double top. If we look also on a monthly, we've had a sideways correction so far. And you can see it really on the weekly. So we've got from very overbought back to the RSI being in the middle with cycles at the bottom. This is a sideways correction without triggering a more significant topping pattern. So I'm sitting up to take notice of gold this week, potentially. It's only a potential. Silver stalling out at the 50 on the channeling double and the first target. But there's no great pattern just to the long side yet in silver. Copper breaking down. Going to be very interesting and see if it makes a new short-term closing low or if it can get back above, especially this open price at 445. But in order to not make a new closing low, it has to close above June 13th's close. But copper still breaking down, has this very yucky potential. It's a multi-bottom is broken. It would need a daily close, but I'm going to pull this off now for the time being. It's too sloppy. What else do we have? We have the yen. They can't be, the Bank of Japan cannot be happy with this. Cannot be happy with this. So still, yen's still weakening. Remember, target based off the probabilities is still this 159.18. Could we get another yen intervention before that? But the yen in a very lopsided potential double top may never trigger, but that's the only thing that would take the weakening yen off the table. And I would flip that to the conservative side if it does trigger. What else do we have? Euro, not much to talk about. Still expecting the euro to possibly trade lower after a bounce move. Spiders, 542.16's looking where we're open, but very key support. Very key support coming in about this 540.80. And then we're at about 539.95, and then we have the gap. And there's a huge void. So keep that in mind. If you start breaking down, especially below this key support shelf, and that's 12.5% harmonic. To the upside, you're looking at 543.25 area. If we're doing the little short-term harmonics, if we do break to new highs, the key area is 547.34 in the short term. So far, a sideways correction with the rising rotation zone on the 4 hour, and the daily rotation zone is back at 537.90. The Qs with the wedge pattern hit the next little harmonic area above there, 483.46, trading 479.29. So 483, the pullback area or the harmonic from the weak pausing area is still at 479.30 area, right where we're opening. So that's going to be key support. If we break below that, my key area is 475.35. Keep an eye on Bitcoin. Bitcoin triggered the double, got a little couple day rally, could not get back above the 50 EMA, could not get into the rotation zone, and is rolling over. Now, what would reverse that for me in the short term We do have a little mini double bottom. Would that invalidate the bigger double, the bigger potential double top? No. But that's the only thing that would watch for a little bounce back up potentially. Other than that, we could see a pullback in Bitcoin, which does not even break very key support. Tesla, nothing to talk about. Nvidia, next target, if it keeps on marching higher, is 138.08. Trading 133 at the open. So these Nvidia is still chugging along. If I think that this market is rolling on up until the stimulus money runs out, how would I tell when it's happening besides watching market price action? If I don't understand your, if I, well, the stimulus money's run out. Now it's just trading on pure momentum with getting more and more consolidated. And that can keep going. Don't get me wrong. What am I watching for? I'm watching for, again, you're not trying to call a top. Are we in very toppy areas? Yes. But let's just take a look at pure price action. Let's take a look at pure price action before, even if we came down. First key area would be about this 5,300. Would that do major technical damage? No. That would just be the prior breakout level. Your major technical damage starts happening if we start getting back below about 4,800. 4,800, you start getting significant technical damage. That would be the longer term breakout area that we broke out in January. That's where it starts getting very interesting, just even from a technical perspective. And you see even on the NASDAQ too. The NASDAQ would be all the way back at 16,600. Now, we have some potential topping setups, but could they turn into more significant tops? Yes. But other than that, they could just be normal pullbacks. So why you just know where your stops are based off your timing in the long term. Because I have long-term stops, I have medium-term stops, and I have short-term stops. And for my long and medium term, I've told you, it's stuff I don't want to hold is gone, and short-term bills is where it's at for me. And forward earnings projection of forward earnings and T-bill yields are roughly getting in line. So why take the risk on the stocks? Yes, it can keep marching higher. That's my perspective. What's the best setup to trade? There is no best setup. One of my favorite are doubles. Period. But there's no, I like percent B buy. There's a lot of setups I trade, even stuff I don't cover here. It all depends on time frame, duration of trade. And what's more important is getting your macro analysis in line, and then because you can always find something that's going to trigger a setup. It maybe it's not something I'm going to watch, but get your macro analysis in line. Let's see. Sterling mentioned Oxy. Let's take a look at that weekly. What did you have to say on Oxy, Sterling? Oxy has a really interesting looking daily chart, channeling down, approaching major support, great buying pressure on Friday, and a potential double bottom. So you're closer to the support area. Let's see. Let's take a look at that daily. I mean, that's the only thing I'd watch. I would not be front running this one. I'd be watching to see if that daily triggers. Other than that, I'd err on the side of C because you're still below that 62.5. It's finding support at 75, but if this rolls over and breaks down 57.49, that takes it into the real key support area. You can see that if it breaks down here again, that takes it into the real key support area. But if that daily does trigger, I'd sit up and take notice because the daily rotation zone would be out of the way. I like divergences. However, if you're going against the trend, I like triple divergences, unless it's a weekly major divergence. Going with the trend, I like divergence setups, and you can use divergences as well. You can use divergences on the RSIs. People use it on the MACD. It's just your favorite setup. There's even divergence setups you can use on the Bollinger Bands with a dip below the band and then a higher, the band making a lower low, but the price making a higher low. You can find a lot of different divergence setups. And what are divergence setups? It's waning momentum. So now to the upside, that's why I like triple divergences, because sometimes it takes 3 pushes higher, at least than the daily and the 4-hour. So, but also if you see here with the oxy charts, it's up. We're running out of momentum to the downside, but we have not triggered a reversal pattern in my book. Okay, let's take a look. I went to the open. Sorry about that, but there's not much going on. So it tried to, it'll spike down, testing key support and snapping back above it. So at this point, I'd be watching that 54.93 area. 54.93, even on a 5-minute closing basis, because you start getting closed below there, could be guiding to a more significant breakdown. Very key resistance is up here about 55 to 55.02. Again, the more important thing, a weaker opening, but not a horribly weak opening, but a very rapid snapback with that key support holding. Unless we break key support or get through key resistance, I'm going to watch for error on the side of a choppier day until the market proves otherwise. Till it proves otherwise. Now, if we do not hold, if we roll back down and start getting some selling pressure come in, I'll be watching that 54.93 area. Keep in mind, retail sales tomorrow morning are going to be key. Retail sales. You got Harker speaking this afternoon. There's not much today. So retail sales are really going to be key. And as I started off the live stream with, we are in significant potential toppy areas with Elliott Wave and DeMark setups, but they need to trigger. So keep that in mind. NVIDIA, let's just keep going. NVIDIA chugging along higher. And then we got to check out AI. Look at Avga, 1800 to the moon. To the moon. Stock split. The split isn't even till when? July 15th. What is it? 72 PE. Let's just buy it all. There's no even area to put a a pausing bar in. I'm wondering if this will hit 2,000. I'm wondering. Look at that. Vertical. Wonder if we go back, if we pull this back, this harmonic back to the next key major low. Look, we're even above that target. 1753. If we go all the way back, somewhere, it doesn't really matter where we're not trying to catch an exact low here. We're above that target. This is in complete blow off territory to me. Oh my gosh, this is amazing. All right, my word to everyone for this week would just be cautious and don't do stupid this week from getting sucked in to longer term positions to the upside. Be careful with that. A lot of them are gamma driven. A lot of them, from my perspective, are gamma driven, but that's the nature of these markets right now. That's the nature of the markets, especially with the short term option gamma juice. So it just compounds the momentum. What I'm wondering is if we really start breaking down at some point, are we going to get the exaggerated moves to the downside with gamma juice? Because it can work both ways. Also, if you get some of these mega caps starting to miss earnings and selling coming into this concentrated mega cap market, what then happens? Because you get people selling the stocks, which means also you get the ETF selling up, and we could really see cascading down. What's led to this bleed up that has been going on? This bleed up pattern can also potentially happen to the downside. No, I don't recommend scalping dark screen. That is a very tough game to play. I do not recommend scalping. With that, I shall talk to everyone later. Bye for now.